Yo, welcome back to another episode of Mailbag Monday from the Money Matters podcast. You've got the OG crew. I'm back in Chicago. I'm back in the empty closet. Why is your closet so empty, bro? Mind your own fucking business, because I want it to be. I'm back in the empty closet, and I've got my dad, Bill, Dollar Bill, and my best friend, Dylan. And we're happy to be here. We took a week off. There was holiday, so we missed last Monday. Before that, I was out in Europe, so we missed Dollar Bill. So it's been a while. It's been a while. What's the lyric after that? Since I something. What is it, Dylan? Let's hear the pipes.
In your face.
Is that how it goes?
Yeah.
Okay. Well, we're not very good at singing, but Dollar Bill has been in financial markets for over 40 years, and he's pretty good at assessing and trading those. So for the first time in almost a month, Dollar Bill, what is your opinion on financial markets and Bitcoin as we're trading? We're still chopping around between 50 and 60,000, the orange coin.
My opinion is the same as it was when we last spoke. I'm going to start. I like coming at it, just with a broad overview across multiple asset classes. If you can name an asset class, I'm pretty sure it's up year over year, right? I'll start with the Dow. This time last year was 34.6, and it is gained. It's now 40,700. That's a 17% gain. Gold's up over $500 year over year. On this date last year, 9/9, 23. Gold's $1,922 now, close to 2,500. That's a 29.8% increase. I use the Case-Shiller index to track real estate, but I don't really believe it. That's only showing real estate prices up 5%. But there you go. Whether it's the Dow, you're tracking business conditions. Gold, you're tracking international monetary accommodation. Real estate is, again, another broad category, and they're all showing strong year-over-year double-digit percentage gains. And we have 56 days until a pretty contentious election. So, but again, I know I said the same thing last time we met, but I don't see any reason not to continue trading from the long side. And I think you can be aggressive. I mean, with this try to imagine. As you know, my opinion, monetary authorities do not like surprising markets. They do not like inserting themselves into an election cycle, particularly, one that we're looking at now could be pretty contentious, right? One guy's already been shot. The other guys, stormed the Capitol once. The other guys, swapping out candidates. It's going to be it has been a contentious election year so far, and I don't see any monetary authority that wants to insert themselves into this. I think we're on hold. Well, we're going to ease, but whatever's priced in is going to play out as it's priced in. I don't see any surprises. So get long and get paid has worked 17%, 29%, 5%, and I think it's going to continue for the coming months.
Love it.
Get paid. I have a question for you. I've always thought of Bitcoin as the best index or indicator or pulse on dollar liquidity. We've talked about this on the podcast before because it's really the only true liquid global free market that's open 24/7. So whenever anything happens, like a bomb goes off or Trump almost gets shot or something, even on a Sunday night, Bitcoin's always moving and it moves first. And so, for example, most recently, it led the yen carry trade fiasco where Bitcoin crashed on a Sunday night and everyone was like, what the fuck's going on? I thought it was a stable store of value. And then everything else crashed 24 hours later. And you realize, oh, Bitcoin's actually the smarter asset because it's liquid and accessible and freer than everything else. With that being said, Bitcoin did take a pretty significant nosedive. My opinion is it might have to do with the interest rate cuts. It's actually not clear to me how good rate cuts. Basically, Bitcoin's moving. To me, that always means something's up with dollar liquidity. And do you agree with that? Like, my personal opinion is that the rate cuts are bad for dollar liquidity. in a very complex, nuanced way. And that Yellen, I've talked about this on this podcast, Yellen is the one that's been giving us dollar liquidity. I mean, you've got S&P, like you said, real estate, Bitcoin, gold, all up with rates at 5% and haven't moved in 18 months. So clearly times are inflationary and dollar liquidity is being pushed somewhere else. I think it's from the Treasury. So what do you make of all that? Or you think Bitcoin sold off because, you know, someone had a lot to sell?
Well, yeah, but the headwinds for Bitcoin, I think we know just from ETF intake is more or less equal to the daily new issuance, right? The ETFs alone are taking what the protocol produces. So but the main headwinds have always been Bitcoin, have always been seizures and liquidating seizures,
Mm-hmm.
right? I mean, we liquidated Silk Road coins at like $600. I know what you're thinking. Should have kept those, but I'm assuming these were seizure liquidations that the market has to plow through. But once the overhead is cleared, I mean the math is the math. ETF publish their inflows, right, and that number is more or less exactly what the protocol is producing. So any type of new demand, I think, has got to be solved by price.
Yeah. I just saw an interesting idea from someone.
International liquidity. If you want to point, I just think, come on, Bitcoin is 14 years old, but only 10 or 12 of that where it really had enough liquidity where where Mount Gox wasn't, the bellwether. If you want to look for liquidity, I say you got to look at. I would start with gold, and that's mine. That's what. I mean, that's your dollar liquidity story, right?
But gold didn't lead the yen carry trade. I'm talking more real time market indicators, not longer term. Because I just read. I got to read up on it because I admittedly don't have too much of an opinion, but I read an interesting take from someone I really respect, and it was that he thinks that when you lower rates, that the money managers are going to go chase like the highest short-term risk-free yield, and that's not in. I think it's like their money's going to move out of reverse repo markets or something and into a different, because now rates are lower than some instrument Yellen was issuing, and so that actually sucks liquidity out because you can't repatriate and borrow and lend against where all the money's going. It was some repo facility. And so basically I was curious of like, oh, if Powell cuts rates, is that actually bad for dollar liquidity? Because Bitcoin got smoked, but then shortly after that, the S&P started to get smoked too. Like everything got smoked towards the tail end of last week. And I was just like, I wonder if rate cuts is actually taking parked capital out of, because now rates are being priced at like, what is it? 5 flat or something like that. Anyway, I guess I'll follow up next week on Money Matters when I have some time to digest what's going on. We'll see how the S&P opens today, if Yellen makes any announcements, and obviously everyone's waiting for Trump.
I mean, there is no excuse for any monetary authority allowing liquidity to tighten in financial markets. Like I said, too much instability, too much fragility, and you're in an election cycle. If there is a monetary authority that is somehow supervising draining of liquidity from the financial system, then I assume that guy's going to be fired by this time next week. Well, try to imagine you got a 1987 style liquidity problem in the stock market in this environment, right? 2 months out of an election, you just inserted yourself, into a pretty contentious presidential election. I can't imagine trying to, doing it. Plus, the Fed has already said we're going to focus on how many more CPI numbers do we have? Do we even have enough before election to justify inserting, for monetary authorities to drain liquidity? I just don't see it. I think we are dead flat on funding, and whatever it is, 5.25, 5.33, where it has been really for a year. I think there really is no reason to even risk adjusting liquidity in this environment.
Yeah, I agree. I just think I think we'll see something from Yellen soon then, because I'm pulling up the blog. It's Arthur Hayes, for those that don't know. I think Arthur's like one of the best macro minds when you overlay Bitcoin. And so I gotta read it. But his point is that money market fund managers, which, you know, money market fund managers manage a lot of the like dollar liquidity in the world. And the reverse repo, the RRP yields 5.3%. is what he writes, and funds will be invested in T-bills if their yield is slightly greater. Starting mid-July, the 3-month and 6-month T-bill yield dropped below the RRPs. And so basically these guys are swinging their capital between these facilities, and one facility is far better for dollar liquidity than the other. And so when Powell came out and made his remarks to basically warn the market that he was absolutely going to cut, and they started getting it priced in, that the money market fund started rotating their assets into different instruments that were more bearish liquidity. And so the expectation, and then I think what happened is Bitcoin reacted to that first, and then the S&P started to get smoked too. And his opinion is that Yellen is going to come out and give liquidity somehow, because to your point, I agree with you. They can't afford, especially in an election year, for assets to get smoked. So if the market is saying, oh, you're going to cut rates, well, that means I got to go park my capital here, and that's not good for liquidity's purposes, and they're going to have to fix that. So Arthur shorted Bitcoin into this weekend, and he actually closed his short because he said, I bet Yellen's going to have about enough sometime soon. So Bitcoin slid, and then you saw it rebound like 2-3% Saturday and into Sunday. And so I don't know, I guess for the audience, that's kind of interesting, is that rate cuts isn't necessarily good for dollar liquidity based on all of the Treasury's involvement over the last few years. Really, Yellen was the one that kicked off the Bitcoin bull run and the asset bull run at large in late 2023, really. And so I think we should all just look out for Janet Yellen, how she's going to finance this debt, how she's going to find liquidity, and Bitcoin usually sniffs this stuff out first. But as I said, this is all half-baked. I got to read into it. And so maybe next week, after we see the market action this week and I take a closer look, I'll have more to say. But interesting nonetheless. And as my dad said, Bitcoin still remains in the same range it's been in. It's chopping around 50 to 60. And, you know, short dollar at the end of the day, get long, get paid over a long enough duration has been the winning trade.
I saw a tweet over the weekend too that I'm pretty curious, Bill, your opinion on. It read yield curve disinverted, everyone buckle up. What does that mean? What does that mean for Bitcoin? The yield curve disinverted? I guess it's been inverted since 2022, but I also don't know what that means either.
Well, it's been more or less flat. Inverted would be short rates are over long rates, and it's, like I said, it's been pretty much dead flat, maybe a minor amount over. If it disinverts, an inverted yield curve is bearish asset prices. I mean, that is monetary authorities are keeping liquidity off the market, are draining liquidity and driving short rates over. But if it goes back to a positive slope, you would assume that that's friendly to asset prices. So now markets can, you can rally. It would be, it's just easier to trade any asset from the long side if, in a positive sloped yield curve. But I mean, you guys are talking, this has so a quarter, 20 basis points inversion or positive slope is really immaterial. But yeah, I suppose. But yeah, you're talking really fractions of positive sloping. No, we like it better when short rates were 0 and long rates were 5, right? That was a nice positive sloping yield curve. And no, flat is harder to rally. But again, the amount of slope that's in this yield curve is really immaterial. It's basically a flat curve.
And Bitcoin responds the same way as other assets with a positive sloping yield curve, or does it operate a little bit outside of that conventional sort of norm?
Well, as I said, Bitcoin, gold, there's tendencies to, I start my chart with the Dow but Bitcoin and gold should be more of a reflection of China, India, emerging economies, emerging markets that are providing a lot of the liquidity. You tend to look at everything through the dollar lens. But no, that's why I like, broad variety of asset classes, because, it seems to be driving these markets, really seems to be emerging markets, Far East markets, and less so than the US, right? Which has been, like we say, but I mean, still everything's up. You find an asset class and it's got a strong year-over-year gain. I think the story really has just been debasement over debt-driven dollar debasement, asset inflation. Get long.
Yeah, same story regardless.
I do.
Sorry.
Yeah, I do think what's interesting is, the market, the interesting thing about the bond market is the market will punish the monetary authorities if they don't fix things themselves. That's been the most interesting thing for me. Once Treasury hit 5%, when did Yellen come down and say, I've had enough and I need to fix this? I think Treasury's hit 5%. So, but the point is, like, the market will punish monetary authorities if they don't address and fix the issues at hand. And so there are levels at which Yellen has tapped out and said, I had enough. We can't sustain, levels of 5%. Like if yields were to get 5, 6, 7, 8, 9, 10%, where the market demands, if the US economy is growing at 10% and the market's going to demand, I want that 10% growth returned, and they can't afford that. And so I think there's always been the main takeaway is in watching the bond market is basically, if Yellen and Powell aren't going to do their jobs, then the market's going to force their hand on it. It's been that way for years now in this kind of like post-COVID era, right, Dad? Wouldn't you say that's the case?
Yeah, there used to be, years ago, the market used to have an expression, the bond vigilantes, right? Like that the market is going to force monetary discipline and if monetary authorities aren't going to do it, then markets will do it for them, right? We'll take it. But that just hasn't been, I don't know, it's been a pretty friendly, pretty much one-way markets. Am I expecting a policy error from monetary authorities to get some type of strong reaction from interest rate markets? No, I'm just not. I mean, it just seems there seem to be any liquidity problems. No, it wouldn't markets. I mean, why would you even want to risk that? We're talking about a government that, right, last time the economy slowed down, they sent $1 billion of stimulus checks out. They're just not, I just don't think monetary authorities are going to risk any type of liquidity driven problems.
I agree with you, but let me give you an example. So you've got zero interest rates, biggest asset bubble like ever, right? COVID era, highest inflation in American history. And then the Fed now is told by the government, you got to fix this shit now. It's making us look bad. So fastest rate hike ever. Arguably, the Fed should have kept raising rates because they still haven't hit their inflation target, right? Target 2%, we're still at 3%. So why did the Fed stop? Why didn't they raise rates to 6%, 7%, 8%, 9%, 10%? Now, the reason is that would have broken a lot of other things. But the point is the Fed paused they're hiking in 2023. As soon as the Fed paused, then the 10-year went skyrocketing high, is my point, Dad. And so the point is, if the Fed won't tighten conditions, then the market will, right? That's like the market is saying, fuck you. We want rates higher. And then that's, I think, is when Yellen stepped in and said 5% 10-year Treasury, like, we can't sustain that. And that was the recent bull run, was when she stepped in late 2023, when the 10-year hit 5%. And she came in, gave a bunch of liquidity. And that was when Bitcoin ripped from like Q4 in 2023 through Q1 of 2024 of this year. Bitcoin went from 20,000 to 60, 70,000 or whatever, right? And then, I don't know. So I think we'll see. Like, if the Fed and Yellen don't do their job, then the markets will tighten conditions for them. And who knows? Like, what's the 10-year yield at right now? 10-year US Treasury rate. 3.7. Okay. I would watch.
Here's 20 years of consumer price index history. And I mean, if that looks like it's trending up, or monetary authorities are somehow losing control of consumer prices, I don't agree. I mean, I think you've got to have disruptions. War in Ukraine, you get maybe weather disruptions or whatever, the logistical shipping problems or something that can jiggle it, but that does not look like anything that a monetary authority is going to lose sleep over. I mean, they just don't. It does not look like they're losing control. I think a gradualist. I mean, every market is kind of saying the same gradualist approach on liquidity and interest rates.
Yeah, this is from that same blog. Again, if you guys are interested in macro, I'd encourage everyone to check out Arthur's stuff. It's great. If the Fed won't tighten conditions, the bond market will instead. Like the unexpected rise in 10-year yields after the Fed's 2023 pause, the Fed's 2024 rate cut will spur move in yields towards the dangerous 5% mark. Why is 5% yielding 10-year Treasury bonds so dangerous to the health of the American financial system? To answer the question, it is because that is the level where Janet Yellen believed it was necessary to step in and inject dollar liquidity last year. She knows more than we all do about how fucked the banking system is as bond yields bear steepen. I can only guess at the magnitude of the problem given how she reacted last time. So the point is, if the market doesn't like the way the Fed and the Treasury are acting, then the 10-year rose towards 5% last time, and they came in and juiced assets like a motherfucker. And so we'll see. Anyway, I just thought it was interesting. As soon as Powell came out, gave confidence to the financial markets that he was going to cut, Bitcoin took a nosedive. The S&P didn't appreciate it. Everyone was kind of confused. Like, I thought lower rates were better for assets. But if you take a closer look at where the money market funds are moving their capital, you realize it might not be good for dollar liquidity. And you're like, okay, interesting. Well, let's watch the 10-year. Because last time the markets were upset about dollar liquidity, when the 10-year got close to 5%, Janet Yellen turned a $20,000 Bitcoin to a $70,000 Bitcoin in 6 months. So let's see. If something goes down, is she going to turn a $70,000 Bitcoin into a $400,000 Bitcoin? I think so. We'll get back to you guys on this topic next week, but interesting nonetheless. And despite it all, Bitcoin remains at 55K. So I don't know why people are so panicked. It's at the same price it was, well, a week, a month, a quarter ago. Is just chopping around, waiting for the dollar, waiting for these financial authorities to make their decisions.
I know. Well, what did we say on one of the prior ones? Markets with too much bullish sentiment are either going to wear you out or scare you out. I'll definitely take wear me out versus Bitcoin's ability to scare you out of your position is legendary. Try to stay long at 20,000 down to 3,000, right? Is that boy, that thing bottomed out. Bitcoin can scare you out. China bans Bitcoin, or Mt. Gox liquidity problems, whatever. I will definitely take a wear you out to refresh this market's open interest.
The first market cycle that we were in, Bitcoin went from 1,200 to 200 over 3 years or something like that. That was a wear you out and a scare you out. I am more convinced that as the asset matures and as time goes on, it becomes easier. There's less volatility. The wear you outs and scare you outs aren't nearly as nauseating and threatening, but there's probably going to be diminishing returns and lesser upside. Obviously, buying Bitcoin 10 years ago gives you better returns than buying it 5 years ago than buying it today, probably.
The price with Bitcoin is you are never that far away from starting to price in the next halving. I mean, it is, price cannot find more supply like every other market can. So the new issuance is not an issue now. We're a long way, from halvings, but tick, right? Then, more ETF demand, nation state adoption, and then the next thing you know, you're going to have to start trading this market pricing in the next halving as well.
Yeah, I've told this story before we move to the next topic, but it's always worth retelling. When I first got into Bitcoin, shortly after my dad did, Dollar Bill did, was Mt. Gox fiasco and the hack. And that was that bear market for everyone, by the way. So that was late 2013 when Gox got hacked and Bitcoin fell from 1,200, I think it was, 1180 the lie or something, all the way down to, it was late 2013 was the high. And then I think it was it 2015 or 2016 was the low? So it was a multi-year bear market where Bitcoin went from 1,200 to like 200. And I might be off by, couple dozen bucks or something like that. And I remember running up to my dad's bedroom in the house. My room was on the first floor. My dad's room was on the second floor. I remember running upstairs and being like, is it over? Should we get into something else? Which, by the way, goes to show, like, no one's born understanding Bitcoin. I've been on my own Bitcoin journey just like everybody else has. And I was like, is it over? What do we do now? And he was buying the dip. And he was like, is it over? This is where we build a real position. I couldn't get a lot of Bitcoin when Bitcoin was at 1,200, but if they're going to sell them to me at 200, we got to keep buying. And that was my first, that was before buy the dip was a meme. And I'll never forget that, obviously. And that was a legend in the making, buying the Mt. Gox dip long before ETFs or Sailor or any of that. My dad was sitting in a suburb outside of Chicago buying the Mt. Gox fucking dip from 2013 to 2015 or 16. It was 16, I think, 2016 halving. And another story of that year, and then we'll move on. 2016, Bitcoin bottoms out. I was in a group chat with about a dozen of my buddies that I grew up with, still in the group chat. And I texted them and I was like, hey guys, here's an idea. Let's all buy one Bitcoin. It's like a couple $100. And I think it's going to go up a lot. And if it does for New Year's, then we'll have like the coolest New Year's ever. We were like 21 or 20. I don't even remember how old we were. It's like, we'll have the coolest New Year's ever. We'll all have like made multiples of returns. We'll be able to actually afford stuff. And if not, who cares? Because we're going to be hanging out in someone's basement anyway. So what's the real risk we're taking as kids? And nobody listened to me. But Bitcoin rallied from $200 that year to, I'll never forget, it closed on January 1st, 2017. So on New Year's, it hit 1,000. And then 2017 was the famed year where it traded from 1,000 to 20,000 in 12 months. But that bear market bottom was 200, top was 20,000. So that was a 100x on your capital if you were in my childhood group chat.
Which I was, by the way, and I did buy that. But that was the first Bitcoin that I bought. Was that conversation in that group chat?
Oh, I thought Jandy was the only one that listened.
No, that was the first Bitcoin that I bought.
Shout out Jandy. He listened to me. All right. Well, what else, Dylan?
Yeah, switching gears here. We, speaking of contentious elections, gold versus Bitcoin, we had a pretty contentious debate, I would say, held by yourself and Peter Schiff on the David Lynn podcast. And I wanted to hear from your perspective, now that the debates happened, how was it? How do you think you did? And is gold better than Bitcoin? Now that you've talked to Peter himself. The gold bug of all gold bugs.
I don't know. I was with Dorsey actually when I accepted the debate, and he was like, "Why the fuck are you doing that?" Like, you know, a lot of people were like, "Why are you giving him any airtime?" And admittedly, I knew what I was walking myself into. I grew up watching that guy. I've always, as a kid, wanted to debate him. It's almost a nostalgic thing for me, and an opportunity to educate gold bugs on Bitcoin and the contrast. And, you know, fundamentally, I hope the takeaway is gold became demonetized when the world and society needed a money that could scale further and faster than your local economy. If you wanted to use gold-backed notes or gold coins to go to your local grocer and your local butcher and your local tailor, that's fine. But if you needed to move money across borders, across the internet, across towns, across countries, then gold needs trust, right? You cannot physically move the gold in an untrusted way. You need to trust your government. You need to trust your banks. You need to trust corporations. And that's when gold became demonetized. And it's not only the fact that you need trust to move the gold, but because you need trust to move the gold, then the concentration of the gold supply is with government, is with banks, which then also doesn't allow it to operate in a truly free market in price discovery. So if government and central banks own all of the gold and you need to trust them in order to be using it as money in the 21st century, then that's when you get demonetization, a divorce from the gold standard. So gold is fine if you're operating an economy of a couple hundred people in a small town in the year 1700, but gold doesn't work as money in the year 2024. And so contrast that and think about what Bitcoin's actually achieved. Bitcoin is not only scarcer, more divisible, more portable, easier to verify, more saleable, but it's able to achieve the properties of money without trust. That's fundamentally what we're talking about here. Like, what did Satoshi Nakamoto say at the end of the day? If trust is required, all these properties are lost. That's what happened with gold. So that was my hopeful takeaway, is that I don't dislike gold. And my approach going into it was, I'm not going to get in a shouting match with Peter. I know they're not going to let me talk a lot. I know he's going to be rude. I mean, I grew up watching his stuff. So I'm going to be polite. I didn't know that they were going to be filming me while he was talking, or else I would have stared at the camera. But he just talks so much and he says the same shit. I mean, I was checking football scores. I was texting my friends. I mean, I've heard the same shit. So I wasn't trying to be disrespectful. Everyone always speculates that I do drugs or something. I've never actually, speaking of my childhood, I was the only kid in high school that never tried any drugs outside of marijuana. It's the only drug I've tried. But I just heard the same shit. I told myself, I'm going to be polite. I'm going to be straight. I'm going to be kind. I'm going to be sincere. I know I'm not going to talk a lot. I know he's going to interrupt me. I know it's going to be rude, but hopefully I can educate some new people, and it's a scrapbook moment for me. I don't know. I think the takeaway is pretty clear. Like, the main messaging, I think people understand. He doesn't bring any new arguments. It was fun. I don't know, like, if I'd do it again tomorrow, though. And I wasn't trying to be rude while he was talking. Usually in these things, if you're not talking, then they're not filming you. You know, the guy's talking for 15 minutes straight. I don't know why the camera's on me. I'm not going to sit here and stare at the camera. Seriously, it's like, I think there was an NFL game on, I think. I was like, I don't have time for this. Like, he's sitting here saying the most nonsensical stuff. So whatever. Anyway, I digress. I wonder what you guys think about it.
We used to have, I don't know if you remember a while back, I think one of your Little League coaches or one of the dads was one of those gold bugs. I guarantee I've lost touch. I haven't been back in a while. I guarantee that guy's still long. I guarantee the people I was liquidating at First American have probably still got their gold in their basement. You just can't budge those people. I don't know. I mean, it's an underperforming trade for almost my entire career, but it's got some type of, I don't know, 3,000-year history that gives it some type of allure, some type of international magnetism, where gold bugs are just, you can't budge them. Believe me, I've given enough margin calls, gold longs, and how you can stop. I mean, whatever's bullish on gold is certainly bullish on any other asset, particularly Bitcoin. How you can watch, Bitcoin's outperformance, or the stock market's outperformance, anything that's outperformed gold over the last, 10 or 20 years, and still be stubborn about it. Like I said, I don't know, but I've known them all my life. Yeah, you had one on your little league team.
Do you think, knowing what you know now, you would do it again? Like, would you have done it knowing what you know now?
Probably. I mean, listen, like, I know Sailor and I disagree on this slightly. Like, Sailor, Peter doesn't own a lot of gold, by the way. I think 5% of his portfolio is gold, so he's 95% short gold. By the way, 100% of my liquid capital is in Bitcoin, right? So Sailor's point is, you can't even
called Schiff Gold or something, isn't he?
Yeah, but his point is, gold is money, and I compare gold to the euro, to the dollar. Everything else is an investment. So I'll invest a lot of my capital, and my money is stored in gold instead of the dollar. But it's like, yeah, but everything is up against the dollar. This microphone up against the dollar. So saying gold is outperforming the dollar is nonsensical and stupid. This mouse is better than the dollar. This water bottle is more expensive last year because it's priced in dollars. So like, that's not a real thing. But yeah, he's short gold with all the other shit he owns. He owns stocks. He owns real estate. He owns all sorts of shit that's short gold. So Sailor's point is, you can't take the guy seriously. He's not even long and convicted on the thing that he's shilling. And I agree, but where I think Sailor and I agree is that, at the end of the day, arguably the best use of your time is educating people on Bitcoin. The difference between the world we live in right now and a far better world is more people understanding money and understanding Bitcoin, in my opinion. And you can understand Bitcoin and disagree with me, but I've never met someone that understands Bitcoin and disagrees with me on that. And so at the end of the day, if I'm ever asked to be helpful and useful and educating, I've educated the Salvadoran government. I've educated NFL players. I've educated a lot of businesses. I've educated a lot of individuals on the internet. And when I'm asked, like, hey, there's a large audience of gold bugs that want to hear calm, articulate arguments on monetary properties compared to gold, I'm happy to do that. And I think that a lot of the emotional childishness and he's shouting and stuff, you got to just drop that. I have nothing to really, like I said, I've been in Bitcoin for 11 years. My portfolios outperformed Peter's by orders of magnitude. I have nothing to prove, or there's no shouting that can achieve something that my proof of work, right? Like, I think collective Bitcoin communities proof of work. I don't need to shout against the guys. So it just is what it is.
Well, the good thing about this podcast is that we get to own the format. So for, the new people discovering you in this podcast through their own journey through money, or potentially coming over from the Peter debate and trying to learn more, what is the, let's call it 3-minute TLDR, gold versus Bitcoin? What is the argument that Bitcoin is better money than gold?
Well,
and I ask the internet how much gold there is in the world. If you query Google, it returns an answer plus or minus 22.7 million tons. If you Google how much Bitcoin there is, it tells you 19,160. I mean, it tells you to the quarter coin every 10 minutes, right? You are storing value in gold. When you're storing value in gold, you're storing value in something where we actually don't know how much of it there is. I don't see. I mean, Bitcoin is just a flat out better version of any type of store of value. Like I say, where you want to store value for your great grandchildren, you're going to want it to be there 100 years from now. Probably real estate holds its value depending where it is, but there's certainly real estate, as you know, seizure, taxation, and there's also plenty of undeveloped land. But you can store there, precious metals. Yeah. But again, Bitcoin has just a far stronger store of value argument, because you not only do you know exactly how much is extant currently, but you know the issuance schedule, you know how many there's going to be on any given date for the next 100 years, right? I mean, it's just a better store of value argument. But it depends unless you think there's a new use case for gold or something but if the trade is, fiat debasement protection, I just don't see a comparison between the two. One has a far more transparent issuance. Like I said, it's just a more it's just a more clear path towards protecting against fiat debasement than gold is.
Yeah, my approach to this topic is always starting with money fundamentally. In that money, and I tried to do this in the debate, everyone has to understand that money was born out of barter. So a long time ago, barter was you would exchange your labor, your goods, your services, the work you do, your job, directly for the things that you need. So you go into the grocery store and you would say, hey, I'll sharpen your knives if you give me a bushel of wheat for dinner. And you would directly exchange, you would barter your labor. Now, that doesn't scale in an economy larger than a village of 10 people, right? And so money is the market good in the economy that you acquire not to consume it, but to exchange it for what you need later. So instead of sharpening knives and hoping that your butcher needs their knives sharpened so that you can eat dinner, you sharpen knives in exchange for money. And then you can take that money and then you can exchange it for meat, for wheat, for a car, for whatever you need. It's a huge technological invention for humanity as a whole, because not only does it scale the economy, so now you can operate economically, not just in your village of 10, but you can operate economically and trade with the village next door, to the country next door, to anyone in the world, theoretically, as good as the money is. And it also allowed us to hyper specialize in things. Fixing someone's windshield wasn't a direct form of labor that you can exchange and barter with someone else. So it wasn't no one would hyper specialize and be really good at small things because it wouldn't be able to be tradable in barter, right? But if you have money, you can do anything for money. And so now we have people that are experts in everything, in fixing windshields and mowing lawns and being NFL coaches. Like LeBron James wouldn't be able to be the best athlete in the world right now if we were on a barter system, because he wouldn't be able to walk into Whole Foods and say, I just had 25 points. I'll take 4 ribeyes. He'd be like, I don't give a fuck. But he can be an amazing athlete and inspire the world because he gets money in exchange for that. And so money is that market good. And so what properties make a good money in order to acquire it and use it instead of barter? It needs to be durable. It needs to be portable. It needs to be fungible. It needs to be scarce. It needs to be saleable. It needs to have all these things. And so my approach is like Bitcoin's better at being money than gold. Like gold, for context, it is relatively scarce, but it's not visible. It's not portable, right? The reason it requires trust is because you had to give it to government. You couldn't divide it up into a million pieces. You couldn't send it across the world on your phone. It's not censorship resistant. It's very hard to store on your own in large quantities. So anyway, I don't know. I'm honestly exhausted, like talking about this topic, more than I already have.
It's like round numbers, $24.98 in gold. So I need another $1.50, and we can. I want to put gold at 2,500, Bitcoin at 55. That's a reasonably round number. Like I said, particularly with the amount of uncertainty in financial markets, I would not surprise me for gold to sit right on 2,500 for a while. Like I said, it's a round numbers are kind of comfort levels. Let's see. I need another $1.50. 24.9880.
Yeah. Anyway, I don't know. I don't know if you have a specific question, Dylan, but Bitcoin is money. It's better money. And I can easily, like, all the questions about volatility and all this stuff, I tried to answer. Like, Bitcoin's volatile because it has to be volatile. You want it to be volatile. If with more demand, you can't make more supply, you have to have a higher price. iPhones aren't volatile. Why? Because no matter the demand, you can always make another iPhone. So the price is going to be fixed at whatever Apple charges. More demand can't cause a higher price because they can always make more iPhones. But if more demand for something, you can't always make more of it, then you have to pay to get more of it. Higher price. So Bitcoin's volatile because it's inelastic. Gold, isn't. More demand for gold, they'll find more gold. More demand for Bitcoin, it's going to have a higher price. So volatility is as a property of the system. If you want a truly scarce money, it's going to be more volatile in its adoption phase because you cannot meet the demand with more supply. You have to meet the demand with a higher price. So all of these things have really logical answers. You want a truly fixed money that's going to outperform everything else? Okay, welcome to volatility. Don't want volatility, you don't want returns. That's when Saylor says things like volatility is opportunity. That's what he means. You don't want volatility, then you can stick to gold's 2% annualized return. You want 63% annualized? Well, that has to come from a fixed asset they can't print any more of. That means there's volatility. So all these things have logical answers. And also on the topic of value is subjective. That's fundamentally true. You have to understand and appreciate that. I don't know, my computer keeps freezing. Am I frozen to you guys?
No.
Fuck.
24.99 and a quarter. Somebody's got to pay 2,500.
Won't be me.
It's an important point that everyone understands that value is subjective. Adopting anything is an entrepreneurial endeavor. You can trade your labor for anything you want. You want your job to be compensated in wheat, in LeBron James trading cards, in gold, in euros, in dollars, in Bitcoin, in beer cans. You can do it. And you're always at risk that the market doesn't respect and appreciate the decision you made. So that's just fundamentally true. Value is subjective. So for someone to say, what if people don't value Bitcoin tomorrow? What if people don't value the things you value tomorrow? But the problem is that when someone says, well, what if Bitcoin goes to zero tomorrow? It's like, well, it hasn't gone to zero for 15 years. In fact, it's been the best performing in 15 years. Could it technically go to zero? Sure. But it's the same thing if someone's like, well, what if Stephen Curry starts airballing threes for the rest of his career? I can't argue with that. He technically could. Anything is possible. We don't know the future. But he's shot in 40% from three his entire career. And he's the best performant three-point shooter of all time. So I'm going to own Steph Curry. And if you want to speculate on Steph Curry never making another three for whatever bizarre, wacko reason, that's on you. But the point is, everything is entrepreneurial in that way. I don't know if Steph Curry's ever going to make another three, but I'm fairly confident based on the properties he holds as a basketball player and his prior performance that he's going to have a good three-point shooting season next year, right?
Yeah, that's the one argument against Bitcoin that I find to be by far and away the most dumb. Because it's a hypothetical that you could apply to anything else and make every value prop that thing provides moot, right? So what if people stop caring about the internet? Okay, well, then the internet ceases to perform valuable functions in society, right? It's such a moot argument. What if Bitcoin goes to zero? That implies that every single human being on planet Earth, for some reason, the code's broken. Every human being collectively decides they no longer care about it. Sure, but anything goes to zero if that's the hypothetical that you apply to it, right? So it's almost a moot point to argue against.
Yeah. None of the points that people make against Bitcoin, I wish someone made points about the properties of the money or decisions Satoshi made in the monetary policy. They're never about the money itself. They're always
right.
Hyperbolic. It's what if something happens tomorrow? I don't know how to respond to that. Anything can happen tomorrow. You have to make decisions based on today. My computer keeps freezing. I can't see you guys.
Oh,
okay. You're coming through clear, but we can wrap the pod here. Bitcoin is the best money. humanity's ever created. And I think
99.60. I need 99.69. I need that 99.81. I need 20 cents to get my $2,500 round number gold. 29 or 24.99.80. Somebody's got to pay even. Dylan, we walk someplace. And there we go. $2,500 gold. Markets like round numbers. I like asset prices that are inflating. This is, like I said, this is one of those years where the market's just doing all the work for us, right? You can just sit on your hands and be up 30% on your gold trade, not even using leverage. No, congratulations. We have all known a lot of gold bugs that have struggled with underperformance. So you guys are having a good year at 2,500. Yeah, just 2,500 bid. Congratulations, Peter.
Cool. All right, I got to run. Let us know what you think about the debate, or what you thought about the debate, and what you think about Bitcoin being an index for dollar liquidity. And we'll talk to everyone next week.
Get long, get paid.
Get long, get paid.